Earlier on today, I believe my sister, my friend, my colleague, Tayo, and my namesake has been able, and Mitchell, both of them joined together. They've been able to actually introduce you guys to Forex trading. And I believe, I believe you guys discussed what is Forex. I don't need to go over that. If you're not in the class earlier on, the recording has been sent to a Telegram group. Please go back and check the link for the recording. Even after this class, when I want to post the link to this class, I will also still add the link for the previous one. So whoever missed the two can watch the two together. So they told you guys what Forex is and how much is traded, when it is traded, how it is traded, and they give you different examples of how it works and everything. They did that, yes. And they went ahead, they still showed you guys. I can remember, even if I was driving, I was specifically explaining the super banks, government and central banks, commercial companies, speculators, and all. Even the way I wouldn't have need a link to the Telegram. Favor, if you're not on the Telegram group, send me a WhatsApp message. If I am not the one who plugged you in, send whoever sent you. Okay, if you have Favor, yeah, don't worry, I'll see the Telegram. I'll add it to the Telegram. Just send me a personal message on WhatsApp. Okay, all right. And we spoke about the speculators, and I believe by now you all know, each and every one of you are only speculators. We are only speculating. We are in it for the win. And I had Tayo, the way Tayo was actually explaining the whole thing. Trust me, I wouldn't have done a job closer to that at all. All right. So what is traded in Forex, it was discussed and all, and that ended the module 1. So now this is the beginner's introduction to Forex trading module 2. And once again, permit me to introduce myself for those who don't know me yet or are yet to get familiar with me. My name is Adetayo, and most people call me Radio. That's my name from back in the days. So, and I'm a filmmaker professionally, a photographer, and I'm a Forex trader. I became a Forex trader some time ago, even though before I started, I was curious for over 10 years. I was trying to think of starting because I don't know where to start from. And I've been hearing so many things from different people, even those who never traded Forex. They keep convincing me not to stay away from it, which I still regret to date. So anyway, let's go on. So that is the short thing about me. And yesterday, I sent a link to the YouTube link where you'll be watching some videos of important videos that will be pointing you at. Though they are private videos and unlisted videos though, but after you subscribe, you have access to them. When we post them, we always scrub the channel for privacy's sake, and we just don't want to put out a lot of information on the internet. All right, guys, so let's go on. So today we'll be talking about currency pairs. Or was it discussed earlier on, guys? If it was discussed earlier on, if you've done this before, can I know? Tell me it's been done. Just put done in the chat box. If not, say go on. If it has not been discussed by my sisters and colleagues, go on. Okay, great. Thank you, guys. All right. So let's talk about major. There are different currency pairs. We have 3 different categories of currency pairs. We have the major currencies, the minor currencies, and we have the exotic pairs. Guys, I'm not always like this. So I'm sure if you're on the class yesterday, you must have heard me speak. I'm always hyper and active. But in the call in the afternoon, you guys saw I had to park by the roadside to actually be a part of the class. I've been out all day. I'm so tired. So I want to apologize in advance if I'm a bit sluggish. But that doesn't mean you can't ask me any questions. That doesn't mean you can't take me back. If you do not understand anything, please, I will appreciate you telling me in the chat box. So thing, please go over it again. Thank you so much. All right. So there are so many currencies that can be traded in the foreign exchange market. Most traders, they trade some certain currencies. And as a new trader, you will also be starting with the major currency pairs. And why are they called major currency pairs? Because they are the most traded currency pairs. And you see these currencies, they represent some of the world's largest economies. The major currency pairs are the following 8 currencies, 7 actually. That's a typo, we'll fix it later. So US dollars, euro, Japanese yen, Britain pounds, Australian dollar. Who is writing something on the screen? Please, 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 can you please undo the writing? Please, if you just draw something on the screen, please, the person is still doing that. Please, can you undo it, please? So we can all see clearly. Thank you. All right. So US dollars, that's USD. Euro, EUR, JPY, GBP, AUD, NZD, and CAD. And in this diagram right here, you can see the country flags and the currency symbols, the sign. All right. So here on the right, you can see below is the list of their currency symbols, countries, currency name, and nicknames. So let's start with US dollars. You can see code, country, currency, nickname. US dollars. The country is USD, is United States. The country is United States. The currency is dollar. The nickname is buck. Buck. Actually, it's called so many things anyway. It's called so many things. There are so many things US dollar is called. So depending on the country and the set of people trading it actually. So, and who is that? Someone said something. I don't want to miss that. Zoom coach. So as I was saying, then the next thing is the next currency is EUR. That's euro. You can see the country is Eurozones. Is for the countries in the Eurozone. Then the currency itself, can't see clearly, coach. Yeah, I believe is network or something. Sorry, guys. So, can you see it clearly now? Yes, I believe you can see it clearly. Okay, it's fine. All right. So, as I was saying, then euro is for Eurozones. And the currency too is euro. The nickname is fiber. JPY, that is, the country is Japan and the currency is yen. It's fine. Then the nickname too is also yen. Then the next one is Great Britain pounds. You can see GBP, Great Britain, for GB for Great Britain, P for pounds. The nickname is cable. We have CHF. You don't have to know all these nicknames right now. You don't need to know all these. You don't need to know all these details actually, but we want to make sure you even understand the foundation of what you are going into. So we have CAD, which is Canada, dollar, the currency, then the nickname is Loonie. Then we have AUD, Australia, then we have currency, dollar, and we have nickname, Aussie. Okay. Then the next thing is NZD. The country is New Zealand, the currency is dollar, and the nickname is Kiwi. It's Kiwi. All right, let's keep going on. Currency symbols are always 3 letters. Oh, sorry. Currency symbols are always 3 letters. The first 2 letters represent the name of the country, and the third letter represents the country's currency and is actually the first letter. The 3 letters of the currency symbols are known as the ISO 4217 currency codes. Okay, let me explain what this means. ISO 4217 currency codes. The international standard organization is ISO. So they actually, in 1973, they came about this currency code to make things easier for the financial industry. So as it says, the currency code NZD now represents the name of the country. Look at this, New Zealand, NZ. Then the currency is dollars. That is why it is NZD. NZD. Then you can see AUD. AU for the first 2 letters of Australia, then dollar, AUD. CAD, first 2 letters, CA, Canada, then dollar. Then GBP, Great Britain, GB, then pounds. That is GBP, guys. If you understand that right now, please let me see a yes in the chat box. If you understand, please. We have over 60 people on this call. We need to know everybody understands. Please, I'm begging you. I'm not ordering you. I'm not ordering you to put it in the chat box. I need to know everybody understands so we can go on. Please, 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 and please. Please. Okay? How many people right now? We have 31. Guys, let's do this. Let's do this, please. Everybody. I need to know. I need to know. I need to know. I need to know. Let me see. Okay, fine. Perfect. 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 I even trust you guys. You are too smart for all these basics. You are too smart for this. You are too smart for this. All right. So then this one will bring us to talking about the currency pair categories. Read one, you don't understand. Don't worry. Don't worry. Yeah, don't worry. You came in late, read one. Don't worry. The recording will be up after this class. I promise you, immediately. So you can watch over again. So now we'll be talking about the currency pairs. You know, earlier on, I told you, we have the major currency pairs, and we have the minor currency pairs, and we have the exotic pairs. We have the exotic pairs. So now I'm going to tell you why all this, why we have all this. So for the major currency pairs, you can see major currency pairs always include the US dollars. Any currency pairs, you know, we said there are 7 major currencies, currencies, yes. There are 7 major currencies. And when you pair any one of it together with US dollars, that gives you a major currency pair, okay? That gives you a major currency pair. For instance, look at this. There are 7 major currency pairs. Euro USD, USD JPY, GBP USD, USD CAD, USD CHF, AUD USD, NZD USD. Can you see that every single currency pair right there involves the US dollars? So when you pair any of the 7 major currencies against the US dollars, that gives you a major currency pair. Guys, please, if you understand that, if when I'm asking you if you understand, it's not because of anything, but I need to just know that yes, you understand that. At least I'm trying my little best to explain to you in the best way I can. Please, please, please. I need to know, guys, if you understand. Please. I need to know if you understand. It's so basic. I need to know you understand. It's so basic. All right, great, 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 great. I'm happy you, yeah, the answers keep popping in and yes, I wish I can, the PDF. Don't worry, you after the course, you get everything you need. Don't worry, after the course, you get every single thing you need to keep trading on and keep remembering this. All right. Yes, now I know what my Forex friends are putting on their status. Okay, okay, okay. I'm happy. I'm happy now you know that. Just a second, guys. Just a second. Just a second. I want to reply a very important mail. I'm sorry for distracting you. Please pardon me. You can just go over what I just discussed with you. Just give me 2 minutes. 2 minutes is even too much. I'm almost done. I'm almost done, guys. I'm so sorry. I'm not taking you for granted, and I don't ever take you for granted. All right, let's just go on. All right, guys. So the next thing we'll be talking about is crosses. You know, we discussed major currency pairs now, and I told you is when you pair any of the major currencies against the US dollars, that gives you a major. That gives you a major currency pair. Then now, when you now pair any of the major currencies against each other that doesn't involve the US dollars, that is a Forex cross or minor currency. You understand? It's called crosses or minors, one of the two, okay? Guys, please. I believe now you know what a minor currency pair is or what a Forex cross is? Do you know that now? Guys, do you know that any of the major currencies, when you pair them against each other, that doesn't involve the dollar. You know, when it involves the dollar, that is a major currency pair. But when it doesn't involve the dollar, it's a minor. If you understand that, please let me know before I go on. I just want to make sure we take our time to make sure the basics are done so we don't rush things. There's no point rushing. Whoever wants to learn needs to learn properly, okay? All right. Okay, good. I'm happy to know. Don't understand. There are 7 major currencies. We discussed that earlier on. We established that. Euro, GBP, JPY, CAD, CHF, all these currencies, we established them. So when you trade them against each other, that is what gives you a major currency pair. You are trading a major currency pair. But when you are trading a minor or a Forex cross is when you are trading any of the major currency pairs against each other that doesn't involve the US dollars. It's very simple, okay? Then let's go on to exotics. Exotics are currency pairs. When you are trading, major is the US dollars against any of the other major currency pairs. Then the minors are other major currency pairs against each other. But this one now, exotic pairs are pairs you trade against any of the major currency pairs that are from the emerging markets. Emerging market currency pairs are currencies from every other country apart from the major currencies. Countries like Nigeria, Turkey, Iran, just name it. Any South Africa, Mexico, just any other currency, they are called emerging markets. Guys, you know EM now. EM stands for emerging markets. So when you trade any of the 7 major currencies against all these other currencies, it will give you a pair called an exotic pair. And they are always very volatile. As time goes on, you understand volatility and what it means, okay? You understand what it means, volatility and what it actually means, okay? So guys, that is that. All right, let's go on. So the next thing now, guys, is there anybody who doesn't understand exotic pair? Hi. Okay, I'll go again. Exotic pair is when you pair any currency that is not in the major currency pairs against any of the major currency pairs. For instance, you are pairing the US dollars against Naira, it's an exotic pair. Or you are pairing the Great Britain pound against South African rand, it's an exotic pair. When you are pairing any of the major currencies against any other currency that is not a major currency, is known as a currency from an emerging market, EM. So any other currency against any of these major currency pairs will give you an exotic pair. Do you understand now? Please, do you understand now? Please, guys, do you understand now? Perfect. Okay. All right. So I'll go on. I'll just go on now. All right. So that said and done, let's move to the next thing, guys. So we're almost done with the class. We're almost done. Then the next thing is buying and selling currency pairs. As we know by now, Forex trading is the simultaneous buying of one currency and selling another. Currencies are traded in pairs, one currency against the other, and they are traded through a broker online. Okay, we've established the fact that for you to trade currency, you need to trade it against another currency. US dollars against Great Britain pounds, Japanese yen against Australian dollars, South African rand against Great Britain pounds. We have established that. Now, how do we now do this? We do it online from our trading platform app, be it on the phone or on the computer. As the image you are seeing in front of you, you can see someone trying to place a trade from the phone, and you can also see a computer that is reflecting almost the same thing as what the phone is reflecting. So anybody can do this, be it just if you have just a phone or you have a computer, you can do this. Okay, so and you'll be taught about the trading platforms we use. We spoke about it in the orientation class. We just discussed them briefly. So that is how to trade Forex, and it's traded through a broker. A broker is a company that acts like a bank on your behalf, that negotiates the foreign exchange market on your behalf. So what you do is you put a deposit up with your broker, and you'll be able to access a lot of funds to trade the foreign exchange market. So the broker, that is where leverage comes in. Later on, you learn what leverage is and how it works. So the broker will put up some money for you because you deposited with them and you start trading. So that is it. And when trading in the foreign exchange market, you buy or sell currency pairs. For instance, the US dollars and the Canadian dollars, USD CAD, or the Australian dollar and the New Zealand dollar, AUD NZD. And exchange rate is the relative price of two currencies from two different countries. Exchange rates fluctuate based on which currency is stronger at the moment. Okay, let me put it this way. You are in Nigeria. If you want to change dollar right now, for every $1, you know it is 400 and something right now. That is the exchange rate. If you're in Ghana, you know $1 is about 5 cedis. That is the exchange rate. Okay? That is exchange rate. And that is how you trade Forex on your phone or your laptop, whatever device you use or own or have access to. It's easy. Okay? I believe I've been able to communicate that, guys. I believe I've been able to communicate that. That is how you buy and sell currency pairs. Then let's now talk about how is Forex traded. Excuse this, it should read how is Forex traded. It's been updated in the new slide, but you know, as I said earlier on, this is an old slide. How is Forex traded? There are some, as a beginner, you have to understand the concept of pipette, and lot size. You see, in exchange rates, let's say you have $1 right now. Sorry, you have one Great Britain pound right now, and you want to change it to dollars. You know, obviously, one Great Britain pound is not $1. It will be maybe $1.58754. That's what is going to read on the exchange rates. If you go to a bank, we discussed that earlier on, or a Bureau de exchange or the airport, when you exchange money, you see different exchange rates and you see the value. You need to understand that this number one right here, that is the major number first. Then after the decimal points, whatever comes next, the first four are called pips. Pip. If you know that the first four numbers after the decimal when in an exchange rate is called pips, please can you put pips in the chat box? PIPS. If you know the four numbers following a major number when looking at the exchange rates, when looking at the currency value, are called pips, just as I explained right now. You don't need to know the reason why they are called pips, but you know right now, you are sure that if I wake you up in the middle of the night and I ask you that, after the decimal points, the four numbers that follow in a normal currency pair, what are they called? And you can tell me radio now. Everybody knows they are called pips now. Please put pips in the chat box. Please put pips in the chat box. I can see 16 people. Please, guys, we are 60 minus myself. That means 59 people. When I ask you to do something, trust me, just like I'm telling you to write it down, it helps retention. When I tell you to do something, it's because you won't forget, whether you like it or not. Your subconscious will not forget the day you actually typed in the chat box to reply radio that the first four numbers after the decimal point are called pips. You will never forget. The minute you hear pips, you will remember that moment and you will never forget. Please, so I'm seeing 34 right now, except you guys want to pay me. You want to dash me money, you want to compensate me. That is the only reason you will not type in this chat box. And I'll go on. Say, okay, radio, you know, take money for beer, go and drink beer. Forget this lesson. That is the only condition on which I'll continue. But except that, you must reply me. I'm not forcing you guys. I'm not actually ordering you guys around, but you know, this has to be an interactive class. For retention, trust me, you will be happy. You'll be happy you are doing this. Trust me, guys. And yes, I think, let's just leave others. Let's leave others. Let's leave others. Probably they are busy with their kids or just listening and can't type. Okay, I appreciate you guys. I really, you don't know. Yes, yes. You don't know what you are doing. By answering me, you are really making me happy. I know people are not just there looking at me like, what's this guy saying? Say what you want to say and leave, Joe. I appreciate that because you are putting your mind, you are concentrating. It means a lot to me. Okay. All right, guys, let's go on. So let me now read what it says right here. Pips is the unit of measurement to express the change in value. You know, I said it. The change in value between two currencies. When you're looking at an exchange rate, when I now tell you $1 equals to 476 naira 0.63 cents. You see that point at the back? There's something is called, guys. So that is where pips come in, okay? That is where pips come in. So the last number now, the last number, which is the fifth number in most currency pairs, you know I keep saying most. There are some currency pairs that where the rules are different. But at the end of the training, we'll give you an ebook that will guide you on that. It's not hard, trust me. But just basically in major currency pairs, the last number after the decimal, which is the fifth number, is always a pipette. Pipette. You can see it right here, pipette. And when you're calculating the difference between one in currency pairs, when you're trying to buy or sell, when you're trying to add your pips or remove pips, pipettes are insignificant. They don't matter at all. They don't matter. You just disregard them. Okay? Okay. All right, guys. So I believe you guys understand that now. Okay. I believe you guys understand that right now. That the last number, which is the fifth number, is the pipette and is useless when you are trying to calculate your pips in trading. All right, okay. Then that will take me to further explanation of the pipette. You can see pipette also known as fractional pip. Fractional. As you can see in this picture, this is our little friend is pointing at the pipette. You can see it's fractional, 0.2 pips. This is telling you it's not even up to a pip. If it was 1 that is here, it will be 0.1. That means it's 10 of it that will make a pip. Then when you now add 8 to this, it will jump to this place as a pip. You see, it's insignificant. We don't need it. All right. So guys, please, you understand that. I believe you do. I believe you do. Because I know everybody on this call is very, very smart. Every single person on this call. For you to even make up your mind you want to trade Forex, it shows you have it in you. Because if you can't comprehend it, you won't even come near it. So yes, that is why I appreciate you guys. Pipette is a fractional change in the value. You can see right here, pipette, also known as fractional pips, or point is equals to a tenth of a pip. It is usually the fifth number. You know, I said it earlier on, the fifth. This is it, the fifth. Usually the fifth number after the decimal. For instance, if EUR/USD, right here, EUR/USD moves from 1.44301 to 1.44302, you can see 1, 2. It has moved from 301 to 302. That is 0.0001. You can see there are 4 zeros in front of it before that 1. That is a pipette, a point. Then USD has moved higher by 1 pipette. On trading platform, pips usually appear to the right of the larger of 2 larger digits. Look at this diagram right here. You can see EUR/USD. When we want to sell, look at sell. We have 1.3621. Then we have another one inside this red circle. You can see right here, trace it down. It says fractional pip. Fractional pip. That is a fraction. Fractional pip. It is useless. You can see it is circled in red. Do not use that for your analysis. Do not use that for your analysis. So that is it, guys. Do not use that for your analysis. What you have business with is the first 4 numbers. The last number, that is the fifth one, is pointless. And you can see the 2 big numbers they are saying right here. As you start trading, I will show you more how this can easily help you calculate your pips and profits. how it can easily help you calculate your pips and profits, you can see. Then that will take us to lot size. Lot size. Lot sizes. All right. What is it? What is lot size? Forex is traded by the specific numbers of currency units you will buy or sell. And these specific amounts are known as lots. There are three types of lot sizes, and I will explain. I will give you a simple explanation of how it works. The first one is standard lots. It's 100,000 units of currency, seen as 1.00 on trading platforms. When you want to place a trade, we will still give you a lesson on how to open up a demo account and how to place trades in your MetaTrader 4 trading platform app. So when you want to place a trade, you'll be asked to select the lot size you want. So when you see the lot size that says 1.00, that is a standard lot size. That means you want to buy 100,000 units of a currency. That means if you are buying Euro USD, you are buying 100,000 units at that time. So whatever profit you are making from those 100,000 units is what you will keep. Whatever loss you are making from that 100,000 units is what will be taken out of your account. But how are you able to access these 100,000 units? That is where leveraging comes in. And we'll still talk about leverage as we proceed in the class. Okay. So when you see 1.00, that's the standard lot. Please do not forget standard lot. Then the mini lot is 10,000 units of a currency. That means when you go into a trade and you buy with a mini lot, you are buying 10,000 units of a currency. That means you are buying, let's say Euro USD now, you are buying 10,000 units of Euro. That's 10,000 euros. And you are holding it. When it's a buy trade, you are holding it for it to grow, then you take out the profit you make from it. Or when you are selling, that means you want to hold it for it to come down, then you take out the profit you make from it for yourself. So when you buy on the micro lot size, you are buying 1,000 units of a currency. That means Euro USD now, you are buying 1,000 euros to keep, for it to go up, for you to keep the difference when you sell back to the market. Seen as 0.01 on the trading platform. Mini lot size is 0.10. Standard is 1.00. And micro, which you'll be using, is 0.01 on trading platforms. Do not forget this. There are three lot sizes: standard, mini, and micro. And later on, maybe 2 years down the line in your trading career, 3 years down the line, you comfortably trade on standard lots. But as a beginner, please, I'm begging you, never ever move away from micro lot sizes. We'll teach you why later on. So let's say you now go into a trade with a micro lot size of 0.01 and you make $10. Someone else went into with a mini lot size of 0.10. That person will make $100. The person that went in with a standard lot size of 1.00, that person will make $1,000. But guess what? You went into a trade with micro lot size, you lose $10. The person that used mini lot size will lose $100. The person that used standard lot size will lose $1,000. So that is why it's very important to know what you are doing. Do not trade against yourself. As a good forex trader, you must always make sure all odds are in your favor, and it's good to grow steady, slow and steady, than to crash and burn once and for all. Okay. All right. So this brings us to leverage. This brings us to leverage and leveraging. As I've been saying earlier on, when you decide between choosing a micro lot size, mini, it still boils down to leveraging properly or over leveraging. All right. So as a trader, you may not have the money to trade the market. You know, I said it earlier on. When you buy with a standard lot size, you are buying 100,000 units. So, so think as your broker as a bank. So think of your broker as a bank who borrows you $100,000 upfront to buy and sell currencies. To access this $100,000, all the bank asks from you is to give $1,000 as a good faith deposit, which the bank will hold onto, but not necessarily keep. This means when you deposit money into your trading account, they will hold on to it. If you lose your trades, they will take it out of your money. But if you make profit, they will return your money to you. That is why it's a deposit. It is not a fee. It is not a fee. It's a deposit. Let's say you want to buy one standard lot, which is 100. You can see one standard lot, 100,000 of USD JPY. If your account is allowed 500 to 1 leverage, you will have to put up just $200 as margin. This means for every $1, the broker will give you $500 to trade. That is why it's called 500 to 1. $500 will be given to you for every $1 you deposit. Do you understand that? $500 will be given to you to trade for every $1 you deposit. So that is it. You will have $200 as margin. Think $200 is a deposit, not a fee. This $200 is a deposit. I said earlier on, is a deposit to access the money they want to give you, not a fee. That is why you get it back when you win your trade. Leverage varies from broker to broker. Example, there's a leverage of 1-to-1. You see some people, they are so good and they have enough money that they will dump $100,000 in their trading account. And when they are trading with $10, it is $10 of their money. When they are trading with $100,000, it is $100,000 of their money. It's good for them. There are some people who the leverage they choose is 10-to-1. So that means if they want to access $10,000, they will put $1,000 in their account. There are people who use leverage of 100-to-1. This means for every $1, the broker will give you access to $100. So that means for $1,000, you have access to $100,000. All right. So let's go to 200-to-1. So let's say you open an account of $1,000. This means you have access to 1,000 times 200. So let's say an $100 account. That means you have access to $100 times 200. That's $20,000 account. And some broker even give up to 500-to-1 leverage. And whichever you decide to choose is your choice. But as your teachers and coaches, we advise the industry standard, and what we use is 200-to-1. But lately, I started using 500-to-1, which has been working fine for me. And we'll also try it on your demo account anyway. So this is it. Look at this image right here. This is the required margin, your $200. But because you're on a 550-to-1 leverage, you can access $10,000 notional value. Multiply 200 to 50, that's 10,000. So let's say we now move this leverage up to 500-to-1. That means for the $200 you have now, you multiply it by 500. That will give you access to $100,000. That is everything you need to know about leverage for now. You don't even need it to trade right now. We just say you set it. But because we want to build a very strong foundation for you, we want to build a very, very strong foundation. That is why we are showing you all these things and telling you all these things for you to know why this is happening, why this is not happening. Okay. All right, let's go on. So then you need to be able to, as a Forex trader, apart from knowing what leverage is, knowing what PPs, PPTs, lot sizes, knowing the currency pairs, you need to even know how to analyze the markets. But do not get me wrong, you are not starting analysis, you are not analyzing the market. But everything we are teaching you in this tutorial is what will set you up for life, that will set you free as a profitable Forex trader. Okay? So there are 3 types of ways to analyze the markets. We have the technical analysis, we have fundamental analysis, and we have sentimental analysis. You need to be able to use all these 3 for you to stand out, emphasis on stand out, and succeed as a Forex trader. If you don't know how to use all the 3, that doesn't mean you can't still trade Forex. But if you know you want to be a very profitable and successful trader, you have to know how all these 3 work hand in hand. So let's talk about it. Okay, yeah, these 3, see it as a 3-legged table. You have a table or chair that has 3 legs. If one leg is broken, you know that table is tilting over. It's tilting over. When you put load, it will tilt to that side and fall. So that is that, guys. Technical analysis is using historical price movement to determine the future market price. Technical analysis is basically predicting the future market price based on the previous market price and price action. All right, what is technical analysis? Let me put it in layman language. You know, we told you in the orientation class there's something called trading view, or even inside your MetaTrader 4. You can see this image right here. This is what the candlesticks look like. I hope you've gone through candlesticks. Um, you guys have gone through candlesticks, right? Oh no, you've not gone through candlesticks. Okay, anyway, don't worry. These are candlesticks on the screen. So when you start learning technical analysis and you know about candlesticks, about the charts, about the time frame and all these things, you'll be able to say what all these things are saying. What I'm saying right now, what every leader and coach on this call right now are saying right here, you'll be able to see what we are saying. You'll be able to take the action we will take. All these lines you see, they are not just random drawings. All these ones, they are different indicators. You can see this one too right here. And this is volume right here. We know what all these things are saying. It's not hard. It's just proper education. It's just like you don't learn how to um, knit, what's it called, an handbag or yacht, and you just believe you just want to do it. You practice, you learn it, then you practice. You keep practicing till you get to a point where you won't even look at it. You'll be talking and you'll be doing your thing. So that is the way it is. Technical analysis is just looking at what is this chart saying from the past. There's a resistance here, there's a support here. Okay, let me draw it. Let me see if it repeats itself. Then I'll just go for this also action, or I'll go for this also action. So that is what technical analysis is. That is the first type of analysis. Then the second one is the fundamental analysis. Fundamental analysis is analyzing the market based on economic data reports, news headlines, and major economic events. Fundamental analysis is analyzing the Forex market by economics, social and political factors that may affect currency prices. Okay, let's say you wake up in the morning and you want to go do your technical analysis, but you didn't watch the news. I'm not talking about BBC News or CNN News. We have our own applications, and the way we read news and we view news is different. So let's say I now go into the news, then I see a major economic trade calendar event like the NFP or FOMC or something. Then that day, I know obviously there will be volatility in the market. There will be some drastic decision being taken by the major industry players, the main guys. So what do I do? Is either I stay away from the market and forget whatever the technical analysis is telling me, or I use whatever news they are giving to my advantage. Let's say like last week now when a news was released that Great Britain is going into its first recession in the last 7 years because of the coronavirus. Boom, as a forex trader, you know definitely that means they are telling you the Great Britain economy will not be doing fine. And that day, for them to even say it on the news, that means it's already having major impact on the economy. And if you check the forex trading news, the way we check it, you will see the impact color and you will see how it affects the economy. Obviously, it's for me to go to my currency strength meter before I even go into technical analysis. Go and look for a currency pair that is doing fine, a very strong and green currency. Pair it against GBP. I'll buy that currency. That means I'm selling Great Britain pounds. I'll now go back to technical analysis to find my entry and my exit with technical analysis. The fundamental analysis has given me a trade free of charge, easily. Then the technical analysis will help me find my entry and exit strategy. So that is that. Those two, you can see I have been able to explain how they will work together for you right now. These things are not hard. Trust me, if I can do it, if Dr. Ese can do it, if Tyler can do it, if Mitchell can do it, if Angela can do it, if we all can do it. Trust me, there are some of you on this call, you are brighter than us. You are more brilliant and more intelligent than any of us. Trust me, if you are trying to teach a fish how to climb a tree, it will always remain dumb and it will look stupid. But you tell a monkey to climb a tree, instantly, it won't even climb, it will jump. Now tell that monkey to go and swim inside water. Then the monkey will become a fool. Then the fish will become a pro. So it depends on what angle you are saying this from. Right now, you are like a fish that is they are trying to make to climb a tree. No. And what we are here for right now is for us to tell you, no, you are not meant to climb a tree. You are meant to be in the water. Then we show you whatever you need to do inside the water. So it's not hard. You just don't know. Many people have told you Forex trading is hard. You need to know it is not. It's because most of these people, they don't even trade. They don't even know what it's all about. But because they've been able to go to YouTube or Google and do some garbage in, garbage out, they'll come to a conclusion. These guys, you will not regret it. Just know, bear it at the back of your mind that you excel and make a lot of money from this. All right. So let's go on. So let's talk about sentimental analysis. Technical and fundamental analysis are very important, but one other thing affects the way the market moves. We said speculators, we the day traders, the Forex traders, we are solely in it for the win. We don't care about if Iran wants to buy 1 million tons of firearms from Germany and they need to pay them, so they want to change their money. It's none of our business. Why they are buying it is none of our business. We don't need to know why America is sending millions and millions to Japan. It's none of our business. Whatever business they've conducted, that's their headache. Our business now is now to know that, yes, America is sending a lot of money to Japan. That means American value is going down because they bought Japanese yen. So what do? We focus on that. See how we can actually marginalize and take profit from that place. So the question is it for me to buy USD or sell USD? That is what technical and fundamental analysis will do for you. But sentimental right now is not for you to now sit down there. Looking at the charts, so many traders want to sell. They are selling. If I jump into this sell, what is going to happen in the next few candles? That will take you to your technical analysis again. You look at your support and resistance, and you'll be like, man, I'm not selling. This thing will soon break out. I'll wait for a buy. Let them do whatever they want to do. And trust me, my friend, some people will go into that sell. And because of their projection, they didn't see what you saw. They will just lose it. And trade will get wherever you want to enter the market with peace of mind, because so many sellers will have withdrawn their money from the market by the time you want to buy. Guys, all these things sound like mathematics right now. No, it is not. It's simple basics. They are basics. But trust me, it's not the journey of a day. That was why I said it from the beginning in the orientation class. If you are in this to come and make money in 3 days, 1 week, you are in the wrong place. Believe me, you are in the wrong place. But if you believe we hold your hand on this journey and we turn your story around. Not we actually, it's God that will do it, and you yourself, your willingness and your zeal. But we will only guide you, hold your hand and guide you on the journey. Trust me, this time next 4 months, this time next 6 months, this time next year, you'll be making a lot of money. I'm not saying this time next week or this time next 2 weeks or next month. No. You have to perfect the skills. Sentimental analysis now is what will now give you that leverage. You understand technical analysis. You understand fundamental analysis. But you don't know sentimental analysis. And you see people saying buy. They say gold is buying, gold is buying, gold is buying. Let me go and buy gold. And because you don't understand the mind of a trader, you are not even looking at what can happen in the future anymore. What if you now get into it and something else happens? But if you now understand that, okay, looking at these candles, if you understand what candles are saying, price action, all these things, you know very soon, leave them. When the big boys that are spending money now, when they take out all their money from the economy again, and they start buying again back their currency through one way or the other, they will have lost their trade. But you now go for a buy, then you make money. So guys, I don't want to dwell on that. You don't need it as beginners. But as I said earlier on, we are trying to do something, a good job of building a very solid foundation for you. There are so many people that have been trading Forex for months. Even on this call right now, I'm sure there are some people who have attempted Forex or who have gone through YouTube or something. The information you've been able to put together in the space of today and yesterday, I'm sure in a year you might not be able to put it together. All right, guys. So, guys, I need you to be patient with us. I need to be patient with yourself. It can be overwhelming. Don't tell yourself, am I too dumb to understand this thing? No, you are not. You are absolutely intelligent. It's just a new terrain. It's a new business. It's a new thing entirely. And the fact that you even have the courage to get started is enough. That's what will keep you going. Please always remember that.